Imagine this. Life throws a curveball. Your car breaks down, you lose your job, or an unexpected medical bill lands on your doorstep. What's your first thought? Panic or peace of mind? Today, we're building your ultimate financial shield, the emergency fund. This isn't just about saving money. It's about protecting your future, staying out of debt, and gaining true financial resilience. If you want to sleep better at night, knowing you're prepared for anything, keep watching. We'll show you exactly how to build this crucial safety net, step by step. Simply put, an emergency fund is a stash of money set aside specifically for unexpected expenses. It's not for a new gadget, a vacation, or a fancy dinner. It's for genuine emergencies: job loss, medical emergencies, major home repairs, or essential car repairs. Think of it as your personal financial safety net, catching you before you fall into debt when life happens. Many people skip this step, thinking they'll deal with emergencies when they come. But that's a dangerous game. Without an emergency fund, you risk debt. Unexpected costs often lead to credit card debt or loans, trapping you in a cycle. You face financial stress. The unknown is terrifying. A fund brings immense peace of mind. You derail your goals, your savings for a house or retirement might get raided. An emergency fund allows you to navigate life's inevitable bumps without derailing your financial progress or sacrificing your long-term goals. This is the big question. The general rule of thumb is to save 3 to 6 months worth of essential living expenses. 3 months, if you have a very stable job, low fixed costs, and a strong support system. 6 months, if your income is less stable, you have dependents, a mortgage, or health concerns. Let's break down essential living expenses. This includes rent, mortgage, utilities, basic groceries, transportation, and insurance. It's not your usual fun money, but what you absolutely need to survive. Calculate this number. That's your target. Now that you know how much, where should you keep it? This money needs to be accessible. You should be able to get it quickly if needed. Safe. It shouldn't be exposed to market fluctuations. The best place is typically a high-yield savings account. This offers liquidity, easy access, safety, FDIC insured or equivalent government protection. Small returns. It earns a bit more interest than a regular checking account, fighting inflation slightly. Avoid investing your emergency fund in the stock market or other volatile assets. While they offer higher returns, you can't risk that money decreasing in value when you urgently need it. Ready to start? Here's your action plan. Step 1. Set a realistic target. Based on your essential monthly expenses, determine your 3 to 6 month goal. Write it down. Step 2. Automate your savings. This is crucial. Set up an automatic transfer from your checking account to your high-yield savings account every payday. Even a small amount adds up quickly. Pay yourself first applies here too. Step 3. Cut unnecessary expenses. Look at your budget from our last video. Where can you temporarily cut back? Dining out less, pausing subscriptions, or finding cheaper alternatives. Every extra dollar goes straight to your fund. Step 4. Boost your income. Consider a side hustle, selling unused items, or taking on extra shifts. Any additional income should go directly into your emergency fund until you hit your target. Step 5. Celebrate milestones. Reaching your first $1,000, then your first month's expenses. Acknowledge your progress. It keeps you motivated. Don't make these common errors, confusing it with regular savings. This isn't for vacation. Keeping it too accessible, like in your checking account where it's easily spent. Not replenishing it. If you use it, make a plan to rebuild it quickly. Building an emergency fund is a powerful step towards true financial peace. It's the foundation upon which all your other financial goals can securely stand. Don't wait for a crisis to start building yours. What's your emergency fund goal? Share it in the comments below. And if this video helped you, please like, subscribe, and hit that notification bell for more unfiltered financial wisdom. Thanks for watching, and I'll see you in the next one.